The best of money matters. Wealth Tracker.
Welcome to the Wealth Tracker, where we dive deep into the uncharted territories of niche investment strategies that promise to redefine wealth. Hello, I'm Hongbin Jeong. Research from Nextvestment has revealed a striking trend in investor behavior. Clients are most likely to make decisions or engage with their portfolios during a specific window on Monday mornings between 10:30 and 11 a.m. Dubbed the Monday decision window, this period offers wealth management teams a critical opportunity to connect with clients at their most attentive and receptive. Tools like the Intent Index are helping advisors track early signals of client intent, allowing for a timely, proactive engagement that can strengthen relationships and optimize portfolio outcomes. To find out more, joining me now is Michael Davies, founder of Nextvestment. Michael, welcome to the show. Thank you so much for joining us.
Well, thank you so much for having us.
All right. Well, Michael, Nextvestment's research indicates that clients are 62% more likely to engage with their portfolios between 10:30 and 11 a.m. on Mondays. What factors contribute to this peak in client activity?
Well, what we've seen so far is that clients often check their portfolios after markets open or over the weekends, leading to these Monday spikes in inquiries. News flows, portfolio reviews, and just plain anxiety often drives this activity. In addition, it's more like just pure psychology. It aligns with very classic behavior. We like to know about the recent headlines. We have a bit of herd instinct. And more importantly, they're looking for reassurance at the start of the week.
Okay, so how does this timing align with broader market behaviors and investor psychology?
A lot of this is purely based out of getting the feeling of knowing what's going on before they start on a work week. If you think about it, this is the first time that they are thinking about that is coming into their day-to-day after a very enjoyable weekend.
All right. Well, given that many relationship managers are still in sync meetings during this window, what challenges does this pose for, wealth management teams?
I think the biggest challenge that we're seeing is that, you can think about from a relationship manager perspective, they're sitting with their managers, they're sitting with their teams. They themselves are catching up on their work, they're catching up on the things that they will have to do for that week. But that leads to like a delay in engagement with their customers, right? And that, creates frustration with customers because the customers are just basically not being attended to.
Well, then how can firms bridge the sync gap to ensure timely client engagement, you think?
Well, I think a lot of firms need to understand their customers better. They need the right signals. But if you look at the traditional setup today, as a relationship manager, I don't know what my clients are interested in. I have no way to identify what are their priorities and respond quickly if needed.
Okay. So, at Nextvestment, you have built the Intent Index to capture these early signals across client behavior. Can you elaborate on how this index functions and its significance?
So what we look at is the signals across client behavior. Things like what questions are they asking? What assets are they interested in? Their logins, their watch lists, the content clicks. Are they making transactions or executions? And we score each of these to identify high intent opportunities. These signals, especially if they're repeated, right, they can really mean that a customer has something very specific in their mind.
Okay. Well, what are some common high intent signals that RMs should be attuned to, though?
I think when people are doing research specifically on current events, for example, the federal cut rate reserves or, the broader job market, these are signals that customers are now thinking about the macroeconomics in play and deciding whether or not should they rebalance their portfolio or should they perhaps purchase even more. All these signals are stuff that are real opportunities for relationship managers to drive better engagement and better trust that as an individual, my needs are being met.
In volatile markets, clients expect real-time responsiveness as well. So how does the Intent Index facilitate this proactive approach?
Well, this is where we're slightly different than a CRM, right? Traditional CRM is a bit more task-driven. With this real-time sort of engagement, it focuses more on being proactive as well as predictive. We can sort of supercharge teams to identify who to call, when, and more importantly, why.
Well, are there any examples of how, timely interventions have positively impacted client relationships and AUM?
Oh, for sure. I mean, every time there is some major market event, you can see the queries come in. You can see the flurry of activity come in from customers. And what we've seen on our system is that as those questions are being asked, when relationship managers are able to follow up and proactively reach out within the next couple of hours, if not a day or two, client satisfaction spikes, right? Because as a consumer, I feel like, hey, this was something that I was worried about. I'm very appreciative that you're reaching out and giving me more information.
Definitely. Well, then, Michael, traditional CRMs often focus on task management. So how does integrating intent-driven tools enhance the capabilities of existing systems?
Well, I think if you look at the traditional CRM, what it is great for is, if you're preparing to meet a client, you've gotten your meeting notes, you have all this information from your previous engagements. But I think, that key word of being proactive, right? It's a reactive system. I have to decide to talk to the customer first. And far too often is that as a relationship manager, I might have many more customers than I can actually service.
And beyond Monday mornings, then, how can wealth management teams adapt to evolving client behaviors in the digital age?
Well, I think that's the key thing, right? Like today, in the digital age, we don't just operate on business hours, right? We operate 24/7. Markets are no longer operating on, you have assets that are no longer operating on this Monday to Friday, right? You can trade them 24/7. Even in the US, they're looking at 24/7 trading. So ability to engage outside of, the business hours and across application off hours, and more importantly, during, volatile news cycles, right, is very important.
Definitely. Some great insights from you there. Thank you so much, Michael, for joining me today.
Thank you so much for having us.
Thank you. That was Michael Davies, founder of Nextvestment. This has been the Wealth Tracker with me, Hongbin Jeong.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.